Hey everyone, and welcome back to Wealthy Brains. Bitcoin and other cryptocurrencies could eventually become part of the recommended portfolio for everyday investors. ARK Invest Cathie Wood said Monday. Who is Cathie Wood? Catherine Duddy Wood, or better known as Cathie Wood, is the founder, CEO, and chief investment officer at ARK Invest. Also named as the best stock picker of 2020 by Bloomberg News, Cathie Wood manages the world's largest actively traded ETF that focuses on disruptive technologies. Born in Los Angeles, Cathie Wood was involved in the world of finance since the starting of her career. From working as an assistant economist at Capital Group to becoming the CEO of the world's largest actively managed exchange-traded fund, she has seen it all. Recently, in March of 2021, two of Cathie Wood's funds were on the list of the 10 largest female-run funds. Cathie, who is a devout Christian, named her firm ARK Investment as she was reading the one-year Bible at the time of its inception, with the ARK being the Ark. With her years of experience that involves working at several financial institutions including Jennison Associates, Capital Group, and Alliance Bernstein, Cathie Wood has deep and extensive understanding of the financial markets. Iconoclastic style isn't for everyone. Money managers live and die by their reputations. Wood has tied hers to risky bets like Bitcoin, which has so far proven to be a speculative asset par excellence, but has a long way to go before it establishes itself as digital gold or the internet's native currency. Then there is the piece of her reputation she has staked on Tesla, which is run by Elon Musk, who is, depending whom you ask, either a brilliant visionary or a self-destructive CEO, or perhaps both. Meanwhile, executives at powerful companies from Apple to German automakers like Volkswagen have set their sights on Musk's market. ARK made at least one bad bet, even though warnings lights were clearly flashing. ARK's ETF focused on fintech had a position in Wirecard, a German payment company that turned out to be a fraud. According to the FactSet data, ARK increased its position in Wirecard even after the Financial Times began publishing articles about the irregularities at the company. Wood's investing style isn't for everyone. Her flagship ETF is down about 10% this year, showing the ARK roller coaster doesn't just go up. Some of her bets will take years to pay off, if they ever do. They may go out of fashion for a while at least if they miss their marks. Winton, ARK's research director, has already forecast the company's own backlash. I think it's likely that at some point people will think that ARK was a scam and that we don't know our left from our right. About Cathie Wood Stocks and its founder. The website Cathie Wood Stocks was founded by Jeremy Lefebvre. Jeremy is a highly qualified professional in the field of finance who strives to spread financial literacy across the globe. With passion to teach people about finance and stock markets, Jeremy also runs a popular YouTube channel called Financial Education, which has over 600,000 subscribers. The website Cathie Wood Stocks is a great initiative by Jeremy Lefebvre, as it gives the retail market participants an insight into the world of institutional investing. On the website of Cathie Wood Stocks, you can find the daily updated list of ARK's top 25 holdings. It can also show the stock where the fund has its highest weighting and will affect the fund's performance the most. While the data on Cathie Wood Stocks may not seem much of importance to a layman, an investor, on the other hand, can decide where the largest actively managed EFT is currently invested and possibly generate some investment ideas that may benefit them financially. Wood, whose star as an investor rose dramatically last year thanks to the strong performance of her flagship ARK Innovation ETF, said on CNBC's Closing Bell that she believes volatile cryptocurrencies will eventually resemble bonds. We think as it becomes a better accepted new asset class, we do think it will behave. Actually, I would say more like the fixed income markets, believe it or not, Wood said. Her views on Bitcoin. Bitcoin has had a dramatic run to new highs after trading under $10,000 per coin as recently as September. The asset rose to nearly $58,000 on February of 21st, according to Coin Metrics, before cooling off slightly. It was trading at about $51,700 on Monday. Though often called digital gold, Bitcoin does not trade in tandem with precious metals, and its high level of volatility is more reminiscent of assets that are thought of as higher risk. Wood said that at the moment, Bitcoin's price was most correlated with real estate prices. Still, Wood said that she thinks Bitcoin could stabilize over time and become a part of the recommended portfolio for the average investor, which is 60% in stocks and 40% in fixed income. If you think about bonds from this level, this idea of a 60 to 40 balanced portfolio is a bit problematic, Wood said. We've been through a 40-year bull market in bonds. We would not be surprised to see this new asset class become a part of those percentages, maybe 60 equity 2020, Wood said. Tesla, which has been one of ARK's largest positions, converted part of its balance sheet cash into Bitcoin earlier this year. Other companies have also increasingly adopted cryptocurrency either by supporting payments and transfers or actually buying the assets. The flagship ARK fund has tumbled in the opening months of 2021 with the rotation into value hurting some of Wood's largest holdings. The investor said on Monday that she is still confident in her strategy and in Tesla despite the recent losses. Pushing back against climate activists concerned about Bitcoin's carbon footprint, the head of research at Cathie Wood's ARK Invest is arguing that the world's largest cryptocurrency, far from being a danger to the planet, will help generate more electricity from renewable energy. Bitcoin critics often assert that Bitcoin mining consumes more resources, specifically energy, than the benefits it creates. Brett Whitten, ARK Invest's director of research, wrote in a blog post published on Wednesday. Critics also assert that the computation required to secure Bitcoin, even if necessary, is environmentally damaging and ruining the planet. We believe that the opposite is true. During Bitcoin production, a global decentralized network of computers races to verify blocks of Bitcoin transactions, with the winner receiving new Bitcoins. Bitcoin's price has skyrocketed from $29,413.29 on January 1st to as high as $64,899 on April 13th. One Bitcoin is currently worth over $53,000 according to Coinbase. But that payoff comes at a price to the planet, because mining rigs are often composed of thousands of powerful computers that consume vast quantities of electricity. In China, which accounts for some 65% of global Bitcoin mining, according to the Cambridge Bitcoin Electricity Consumption Index, authorities have taken steps to rein in Bitcoin mining in an effort to limit greenhouse gas emissions from coal-fired power plants. A recent report from Bank of America found that the energy used by the set of computers to power Bitcoin is on par with that of some developed countries and rivals emissions produced by some corporate heavy hitters like American Airlines and ConocoPhillips. But Whitten argues that Bitcoin mining could help boost the overall share of a planet-friendly energy and encourage investment in solar energy systems if mining were integrated into a renewable energy system. According to the ARK Invest model, without Bitcoin mining, solar energy could supply only 40% of grid power before utilities have to fund major investments with higher electricity prices. But with Bitcoin mining integrated into a solar system, however, we believe energy providers, whether utilities or independent entities, could play the arbitrage between electricity prices and Bitcoin prices, as well as the surplus solar supply at almost all grid power demands without lowering profitability, Quinton explained. ARK Invest model further asserts that with Bitcoin mining, solar and batteries could satisfy 99% of what the grid needs. The model's conclusions are based on the thesis that solar energy will not be used to mine Bitcoin unless the demand of the grid is first met. From that premise, the model examines whether it is more profitable to store energy in the battery or to mine Bitcoin. The Bitcoin miner allows the developer to more efficiently overpower the system with solar, allowing the miner to soak excess generated energy and power down to accommodate periods of increased demand or patchier sun, Winton wrote. Such innovation could create opportunities at the residential level, says ARK, especially if heat waste from Bitcoin mining can be used in other ways. And as battery supply remains tight due to demand from electric cars, Bitcoin mining for battery systems could produce opportunities in that area as well, Winton argues. Another plus side, a mining attached solar system would be able to generate revenue as soon as it is internally wired as opposed to today's systems, which can take months to get interconnected and cleared to sell to the grid. That is all for today, folks. Would you like to add anything? Let us know in the comments section. If you enjoyed the video, then be sure to leave a like and subscribe if you are new. And I'll see you in the next video.